Hello, it's Thursday the 8th, I'm FxPlew and this is the market brief. So Chancellor Reeves has been on, she was in Toronto and apparently is considering a Canadian style model which would use pension funds accrued by local government employees to fund major infrastructure projects. The combined pot from about 6 million employees currently sits at about £360 billion, and Reeves thinks that investing those funds in what she calls productive assets would turbocharge the UK economy. Her team at the Treasury has already started a review of the pension sector, but most of the key industry players are waiting for her to flesh things out a little further when she makes her first Mansion House speech in the city. Meanwhile, over in the US, some Democrat Congress members are calling for an immediate rate cut. They fear that Powell is playing Russian roulette with the US economy. The Fed has a dual mandate of price stability and maximum employment, and the latest jobs data has rather fueled fears that inflation has become too much of a focus at the detriment of full employment. The unemployment rate ticked up to 4.3%, up from 4.1%. The Fed has been accused of delaying a rate cut unnecessarily where inflation is close to their 2% target, and fears are that they are increasing the risk of a recession. Weekly jobless data is out today. Forecast is for a slight fall to 240,000 after the 249,000 last week was a bit close to 250,000. That should all help add to the sense of calm that is growing in the market as things settle down after Non-Farm Friday. We do have inflation data due out next week. Forecast is for 2.8%, which may reignite calls for a rate cut at the Fed meeting in September. But for now, an emergency intra-meeting rate cut no longer seems necessary. We kick off this morning around 127 against the dollar, 116.10 against the euro, and euro dollar is around 109.35 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.